Hey there, I'm Ben. You've probably heard that investing is a numbers game. They talk about P/E ratios, balance sheets, and cash flow. And while those things are crucial, they're only half the story. The other half, the part that truly separates successful investors from the rest, happens right between your ears. It's the psychological battle. The fight against your own instincts of fear and greed. I've spent a lifetime studying this, and I want to let you in on a little secret. The entire chaotic, often intimidating world of the stock market can be understood through a single, simple story. I call it the parable of Mr. Market. He's an imaginary business partner of mine, and once you get to know him, everything else starts to make sense. Picture this. You and I are partners in a small private business. It's a solid company with good fundamentals. Now imagine we have a third silent partner named Mr. Market. His job is simple. Every single day, without fail, he shows up at your door and makes you an offer. He'll either offer to buy your share of the business or he'll offer to sell you his. But here's what makes Mr. Market absolutely fascinating and dangerously unpredictable. He is wildly, emotionally unstable. His moods swing from euphoric optimism to bottomless pessimism based on the flimsiest of reasons. A headline he read, a rumor he heard, or sometimes for no discernible reason at all. On his good days, he's overflowing with joy. The future is limitless. He sees nothing but blue skies ahead, and he's so desperate to own more of our business that he offers you a ridiculously astronomically high price. It's so high that it seems foolish not to sell to him. But then maybe just a day later he returns, and the man is a wreck. The world is ending. Every piece of news is catastrophic. In his eyes, our business is on the verge of collapse, and he's practically begging you to take his share off his hands for a pitifully low price, terrified of being left holding the bag. Now listen closely, because this is the most critical lesson. As the owner of the business, you are never, ever obligated to accept Mr. Market's daily offers. In fact, it would be financially suicidal to do so. If you sold to him every time he was euphoric, you'd never own anything for the long term. And if you bought from him every time he was depressed, you'd go broke buying failing enterprises. Your power, your advantage, lies in your right to ignore him completely. You can smile, shut the door, and go about your day. Your valuation of the business is based on its long-term earnings and assets, not on your partner's temporary mental state. The intelligent investor doesn't get swept up in Mr. Market's mood swings. They calmly observe them, and occasionally they exploit them, buying when he's irrationally fearful and selling when he's irrationally greedy. Your emotional discipline is your ultimate weapon. So now you know Mr. Market. You know about his wild mood swings and his daily emotionally driven offers. But I can almost hear your next question. Ben, that's a neat story, but my world doesn't look like that. My world is a flood of information. It's a constant stream of news alerts, tweets from so-called experts, talking heads on financial channels screaming about crises and opportunities, and Reddit forums where anonymous users can send a stock's price on a roller coaster ride with a single post. It feels too big, too fast, and too chaotic to be understood by a simple story about a moody business partner. And you're right, it does look different on the surface. But I want you to do something for me. I want you to look past the screens, look past the flashing lights and the algorithms. What you'll find at the very core of it all is the exact same thing that's always been there. People, human beings making decisions. And human nature, my friend, has not changed one bit. We are still driven by the same primal forces, the desire to avoid pain and the desire to seek pleasure. In the market, that translates to fear and greed. Mr. Market is no longer a single man at your door. In 2025, he is multiplied. He is a hydra-headed monster of collective emotion. Every trending ticker, every viral fear-mongering headline, every euphoric to the moon post is just another one of Mr. Market's voices, amplified by technology to a deafening roar. His mood swings are now instantaneous and global. A wave of pessimism that once took weeks to spread now circles the globe in seconds. But I'll let you in on a secret. This doesn't make him smarter or more powerful. In many ways, it makes him more vulnerable. The faster he swings, the more extreme his offers become, creating even greater opportunities for those who know how to watch and wait. So, how does the intelligent investor navigate this modern digital circus? The principle remains unchanged, but your discipline must become ironclad. You must train yourself to stop listening to Mr. Market's words and start analyzing his prices. When you see a stock skyrocketing because of social media hype, and people are frantically buying in because they're afraid of missing out, that is not a new phenomenon. That is Mr. Market in his classic manic phase, wearing a digital mask. He's offering you an absurdly high price, fueled by collective greed. Your job is not to join the party. Your job is to recognize the party for what it is and ask yourself one simple question: is what I'm getting worth what I'm paying? Conversely, when a solid, fundamentally sound company sees its stock price plummet because of a negative news cycle or a general market panic, that is not the end of the world. That is Mr. Market having a depressive episode. He's offering you a wonderful business at a bargain bin price, driven by collective fear. This is not a time for you to be fearful. This is a time for you to be courageous, to remember the true value of the business, and to see the opportunity that emotional chaos has presented you. This shift in perspective from being a reactive participant to a calm, disciplined observer is the very essence of value investing. It's not about predicting what the market will do next week. It's about building a fortress of discipline within yourself so that you simply don't care about its short-term tantrums. You focus on the underlying long-term value and you let Mr. Market's insanity work in your favor. All right, so we've diagnosed the problem. We've met Mr. Market in his modern digital form, and we've understood the psychological battle we're facing. Now let's get down to the brass tacks. Let's talk about how you, sitting right where you are, can build the kind of unshakable discipline that not only survives Mr. Market's mood swings, but actually profits from them. This isn't about complex theories. It's about building simple, powerful habits. Think of it as building your own personal fortress against the chaos. First, and this might be the hardest step, you must create intentional distance from the noise. The financial world is designed to be addictive. The constant notifications, the 24/7 news cycles, the flashing red and green numbers, they're all engineered to trigger your emotional brain, to keep you hooked on the drama. Your first act of defiance is to disengage. Turn off the push notifications from your trading app. I'm serious. You do not need to know the price of your stocks every minute of the day. In fact, it's profoundly harmful to your long-term judgment. Limit your consumption of financial media. Instead of watching the markets daily, consider setting a schedule. Maybe you review your holdings once a week, or even better, once a month. This creates the mental space for you to think like a business owner, not a day trader who's just reacted to the latest headline. Second, you need to undergo a fundamental identity shift. Stop introducing yourself to yourself as a stock trader or speculator. From this moment on, you are a business owner. Let me say that again. You are a business owner. When you click buy on a stock, you are not purchasing a lottery ticket. You are buying a small but very real share of an actual enterprise. You are buying a piece of its factories, its products, its employees, and its future profits. Now ask yourself, does a sane business owner who owns a thriving local bakery suddenly decide to sell the entire shop because a nervous customer walks in one morning and offers a lowball price for a loaf of bread? Of course not. He values his business based on its steady customers, its quality products, and its reliable income. He ignores the ridiculous offer. You must do the same. Your power comes from this long-term perspective. And third, you must have a written battle plan. You cannot win this psychological war by winging it in the heat of the moment. When Mr. Market is in a panic and prices are crashing, your own fear will scream at you to sell. The only way to silence that voice is with a pre-written plan. Before you even think about buying a company, you must do your homework. Decide what the business is truly worth to you, its intrinsic value. Then write down the price at which it becomes an undeniable bargain. This is your buy price. And similarly, write down the price at which it becomes so expensive that selling some of your stake is the rational thing to do. This is your sell price. Your plan is your anchor. When the storm hits and everyone else is losing their heads, you simply look at your plan and execute. You don't debate. You don't second guess. You act. This is how you systematically turn Mr. Market's greatest weakness, his emotional volatility, into your single greatest strength. Remember, the market is ultimately a mechanism for transferring wealth from the impatient to the patient, from the emotional to the disciplined. Mastering Mr. Market isn't about having a higher IQ than everyone else. It's about having greater emotional fortitude. It's about winning the battle inside yourself. This is the foundational first step to becoming not just a smarter investor, but a true behavioral investor. In our next conversation, we're going to strap on your financial seatbelt. We're going to dive into the most important concept I ever developed, the margin of safety. It's the principle that allows you to be wrong sometimes and still come out ahead, and it's what will let you sleep soundly at night, no matter how frantic Mr. Market becomes. Until then, be well, think clearly, and invest intelligently. So now you know who Mr. Market is, and you have the intellectual framework to deal with him. But let's be perfectly honest with each other. Making that mental shift is one thing. Living it day in and day out is where the real battle is fought. I've spent decades mastering this, and I can tell you there are three big common challenges that almost every investor faces on this path. Knowing them in advance is your best defense. The first challenge, the loneliness of being contrarian. When the market is in a frenzy and everyone around you is bragging about their easy gains, sitting on the sidelines can feel incredibly isolating. You start to question yourself. Is everyone else right? Am I the fool for not joining in? Here's the truth. Yes, you will feel alone. Value investing, by its very nature, is a solitary pursuit. It's about going against the grain. But that feeling of loneliness isn't a sign you're wrong. It's often a sign you're right. My advice, build yourself a mental team. Read the letters and writings of other investors who share this philosophy, like myself or Warren Buffett. Remind yourself that you are part of a community of thinkers, even if you can't see them. This isn't a popularity contest. It's about financial survival and success. The second challenge, the drudgery of discipline. It's easy to be disciplined for a week or even a month. The true test comes when months or sometimes years go by and Mr. Market doesn't offer you any compelling opportunities. This period of inaction can be agonizing. The temptation to just do something becomes overwhelming. You might start chasing stocks you wouldn't normally look at just to feel involved. This is where you must remember, discipline isn't a single decision, it's a daily habit. The key is to understand that waiting is an active strategy. Patience is not passive. By waiting for the right pitch, you are actively allowing opportunities to come to you on your terms. Your job during these quiet periods is not to trade, but to continue learning, to research new companies, and to sharpen your criteria. The third and most insidious challenge, self-doubt. Let's say you do everything right. You buy a wonderful business when Mr. Market is depressed and offers you a great price. But then the price keeps falling, or it stays stagnant for a very long time. This is the ultimate test of your conviction. The voice in your head will scream, "You were wrong. Mr. Market was right. Look, the price is proving it." You must learn to silence this voice with logic. Your purchase was based on the intrinsic value of the business, not the stock ticker. Has the fundamental value of the company changed? If your research was sound and nothing material is altered, then the market's opinion is irrelevant. This is where your written plan is your shield. Go back to it. Reread your reasons for buying. Trust your own work. The market can stay irrational longer than you can stay solvent, but if you've bought with a margin of safety, you have time on your side. Mastering Mr. Market is a journey of self-mastery. It's about confronting these three internal enemies, loneliness, impatience, and self-doubt, and choosing logic over emotion time and time again. It is the hardest work you will ever do as an investor, but I promise you it is the most rewarding. In our next discussion, we will arm you with the single most important tool to make this journey safer: the margin of safety. It is the cornerstone of intelligent investing, and it will give you the confidence to act when others are frozen in fear. Until then, stay disciplined and remember why you started.